For Dukascopy TV, I'm Alex Isat with this edition of the Weekly Wrap-Up. Joining me for a review of the past week is senior economist at Berenberg Bank, Schulz. Christian, what do you think have been the main market movers this week?
Well, in retrospect, it was the very strong GDP growth figure for the US in the second quarter, 4% growth. That was way ahead of market expectations. On top of that, an upward revision of the first quarter. That means the US economy, at least in retrospect, looks a lot better than it did up to that release, which has started market expectations and market speculation that the US Central Bank, the Fed, might tighten policy a little quicker than we had previously anticipated, and that has really set off quite a lot of market volatility. So the US GDP release on Wednesday for the second quarter, very strong growth. That is probably was the watershed moment this week.
The non-farm payroll figures and the unemployment rate have been topping market estimates for the past 5 months, making economists wait with bated breath for today's report. Christian, now that the figures have been released, are you surprised at the lower than expected results?
Well, they are slightly lower than expected, but I don't think that this is a weak report overall. Unemployment, of course, edged slightly up, but it is still at very low levels compared to what we've had over the last year, 6.2%. Wage growth, of course, also flat. That is another weakness in this report. But the participation rate, for instance, is up. Separately, we've had some good data on personal income and personal spending, and also previous data releases were revised up. So if you look through the monthly volatility, U.S. jobs growth is averaging above 200,000 a month. Unemployment is declining, and wage growth should eventually set in as well. That's all good news, but it's not so buoyant that the Fed should be worried about any inflationary pressures in the short term, and that should be good news for markets as well.
There's been a lot of negativity surrounding the Eurozone, and a number of countries have seen business and consumer confidence fall. Should we be concerned for the Eurozone's future?
Well, there is a good reason for some confidence figures in the Eurozone to go down at the moment, and that reason lurks to the east of the EU. It's Putin. It's the meddling of Russia in eastern Ukraine, which is weighing on confidence, in particular in the core of the Eurozone, in Germany, and more particularly on German exporters. Germany is most exposed to Russia in terms of trade, so no wonder that Germany is most affected. The good thing for Europe is that Germany is probably in the best position to deal with such troubles economically. It's a solid economy, growing very nicely. Domestic demand so far doesn't seem to be much affected, and it acts as a kind of shield for the rest of Europe, which isn't so exposed to Russia. So we've seen that some of the peripheral countries, Spain, Portugal, have been doing quite well lately and accelerating in terms of growth, and also countries like the UK, which have less exposure to Russian trade than Germany, are doing all right. So overall, while Russia and Putin are definitely a serious tail risk we need to watch, so far at least the impact has been relatively mild.
And finally, what do you think our viewers should keep an eye out for next week?
Well, next week we've got the central banks in Europe meeting, the Bank of England and the ECB. We don't expect either of them to actually do something, but the tone that emerges from these meetings could be important. For the ECB, we expect more dovish talk, even though some of the key indicators for the ECB have improved. Unemployment has gone down, the euro's down, so some things have improved. Inflation is also down, and that should maintain a very dovish language at the ECB. And in terms of the Bank of England, we probably won't get the key news, which might be that somebody in the MPC already votes for a rate hike, so that we get some dissent in the MPC. That will only be revealed in the minutes. However, in speeches around the meeting, we may get an idea of whether dissent is starting to creep in at the Bank of England after all the good economic data that we've had. So those should be the key events. Other than that, I'll be looking for Italian second quarter GDP, hopefully some modest growth over there that should be a boost for Matteo Renzi and his reform efforts.
For more in-depth analysis of what's making the financial news next week, be sure to check back in with Dukascopy TV. Goodbye.